All right, welcome to Fibonacci Retracement. And you know we're going to make this less than 10 minutes. We're going to get to the point. How do you use it? What is this for? Okay, now, so Fibonacci Retracement is generally used as a retracement tool, aka pullbacks. A lot of times stocks are going to move or price action is going to move in a certain way. Now, these two yellow circles, these are indicating my current high and my current low. Don't worry about this part yet. We're going to get there. But as you can see, I am in a bear, pretty much a bear market. This is what we've been dealing with all year. All right, so what we're going to do, we're going to first draw our Fibonacci retracement, which is about here down to here. And don't worry if it's a little bit off the money, you can always adjust. There we go. So the information we're being presented with is telling me that for the current price action, this is where we would be at. That's where I have to work with. Would I be able to expect a strong or a weak pullback? Now, depending on where it goes, this level here is the 382. The next level up is going to line up with the 0.50. And then the next level up, the 618. These levels are important because they can tell you if you have a weak pullback or retracement or a strong pullback or retracement. Now, generally, if you are in a very strong trend, so think about price action as doing deep moves and coming back and then making another deep move. These are indicators that you are in a strong trend. If you get a small pullback like this, so if you are at the bottom, you have just seen your bottom happen, the price has gone away from it in the opposite direction. Look for it to hit this area, not this exact line, but this area. That could be a signal to you to enter or exit your trade, depending how you're trading it. If you only want to trade this pullback, you can make your money here. If you want to jump in here and continue to gather the money on the way down, aka go with the trend, this will be a great entry point for you. So using this tool can help you understand where to enter, where to exit based off of price action. These are just indicators. And remember, indicators will always be behind price action. So you have to learn your candlesticks, your patterns, and when you start seeing certain things, they're going to start becoming very obvious to you. Now, with that being said, say you're now being presented with your next area, which is going to be here. This is where price action currently is, right? So we're going to extend our Fibonacci retracement to here. And I'm going to put it right there. Perfect. Now, as you can see, price action came all the way down here again. But where did it retrace to? Price action retraced to this same area, 382. This could be a signal that price is still in a very strong downtrend. Okay. So what do I mean by that? Well, say price came all the way up to here and retraced. That would actually go with history. So if you look up here, you have 1, 2, a double touch. 1, 2, a double touch. Now, depending on how price action moves for the particular instrument you're working with, you may say, this is a great entry for me. I'm taking it every time, 100% of the time. This is the entry I've been waiting for all day. If it's not, you could be like, well, this is a pretty strong retracement. It's at the 618. I'm not going to mess with it. I'm going to wait for some more confirmation. If it passes the 50 or the 0.5, I'm going to get in. Why? Because some people will wait for this specific area, the 0.50 and the 0.382. This is called the golden zone. So a lot of people will take this area and they will mark it up. And the reason being is a lot of times when the price gets to this specific area, it may be somewhere that price likes to go through. So you could say, well, I know I'm going to get money going through the golden zone. I'll get in here and I'll ride it down. Well, that's great. Now, what if you're in a bull market? So let's look over here. So it is essentially the same exact thing. You're not changing up anything. All you're going to do is do it in reverse. So here's my bottom. Let's say price action got here, right? Let's move it there. That's my current price action. What can I expect? So I saw from the first movement, I got up here. This at one point was my top. All right. So if this is my top here, right there, that's my current top, right? Well, I'm looking for it to retrace down. I want to see if the movement is strong enough for me to get in. Did I miss my entry, or am I waiting for a better entry to go further up? How strong is the trend? Well, I can see that based off of this, it pretty much came down to this golden zone area. So that's the 382 to the 0.50. So these two areas I could mark up, and I could say, you know what, if price gets back here, I'm going to draw a nice little box here, because I know when price gets to this area, it likes to either go through or it can reject really hard off of there. So I draw my little box. I'll wait for price to get here. This is why you get paid to wait. When price gets here, you see if it's going to go through or if it's going to completely reject and go up further, usually surpassing its previous high. With that being said, now we have moved up. We're moving on up now. Now, with that, take your time, because there's going to be certain things that you're going to have to do. Not that. Because this is now our current price. Come on. There we go. Current price is here. So I can take the same Fibonacci retracement, bring it on up. So I can then say, all right, the last time it came here, I still have this zone marked up. Is it going to come back to it? It may not. So this time it gave me a weak retracement, saying I'm a very strong trend. I need to get out of here. There's orders up there I need to pick up. It goes up even further. Now, as price continues to move up, this is our current price action. We move up here. One thing you'll notice is that as price action moves, a lot of times some of the peaks or the highs and the lows will line up with each other on this Fibonacci retracement tool. Now, it's not by accident. Remember, the computer is pretty much doing all the trading for a lot of people, and it tells people where to get in and get out. So essentially, computers are running a lot of the trading that you're seeing on a daily basis. So if you're using a tool like this, it can help you understand where and why they're making their decisions. So the Fibonacci retracement is not a very hard tool to use once you get used to it. It's really about picking out your highs and your lows of your current movement. You can also take this same Fibonacci retracement, move it up from the bottom, because now this would be one of your last base moves. And then here, when you move it up to there, that would be one of your last base moves. So this is your high, this is your base. If price action keeps moving up, you can keep moving your Fibonacci retracement up too. So there you go, less than 10 minutes. If you got questions, let me know. Fibonacci retracement tool is one of the things in your toolbox now. I hope you have fun using it. And if you want more on this, we'll put it on some live charts and see how it works. Thanks a lot. See you in your next tool section.